How to day trade naked puts? Are you curious about how to day trade naked puts? This strategy can be an exciting way to engage with options trading. Let's break down the steps you need to take to navigate this approach effectively. First, understand what selling a naked put means. When you sell a naked put, you collect a premium upfront. You agree to buy the underlying asset at a specific strike price if the buyer exercises the option. Your maximum profit is limited to the premium you receive. However, if the asset's price drops below the strike price, you may have to buy it at that higher price, which could lead to significant losses. Next, conduct market and technical analysis. Before selling a naked put, analyze the asset's price behavior. Use technical analysis tools like chart patterns, support and resistance levels, and volume indicators. This helps you identify stocks that are unlikely to drop below the strike price during the trading day. A solid analysis reduces the risk of being assigned and facing losses. Now, let's talk about selecting the strike price and expiration date. Choose a strike price below the current market price of the underlying asset. This increases the chances that the option will expire worthless. For day trading, opt for options with very short expiration periods, often the same day or within a few days. This allows you to capitalize on time decay and minimize overnight risk. Once you have your analysis and strategy in place, it's time to execute the trade. Sell the put option and collect the premium immediately. Since this is a day trade, monitor your position closely. Be prepared to buy back the option before the market closes if the price moves against you or if you want to lock in profits. Ensure you have sufficient margin in your account, as you may need to cover the position if assigned. Managing risk actively is essential. Naked puts carry substantial risk. If the asset's price falls sharply, you could face large losses. Use stop-loss orders or buy back the put option if the price approaches the strike price to limit losses. Avoid holding naked puts overnight to reduce exposure to unexpected price moves. Finally, let's consider profit scenarios. The ideal outcome is for the underlying asset's price to stay above the strike price during the day. This allows the option to expire worthless or be closed at a lower price, letting you keep the premium as profit. This strategy is slightly bullish to neutral and can also provide a discounted entry point into the stock if assigned. In summary, day trading naked puts requires careful selection of underlying assets, precise timing, and active risk management. It offers limited profit potential but exposes the trader to potentially large losses if the stock price falls below the strike price. This strategy suits traders with a bullish or neutral short-term outlook who can closely monitor their positions and manage margin requirements.